Hey everyone, welcome back to Corporate Decoder, the place where we pull back the curtain on big business and try to make sense of it all. This latest filing from Delaware VIP Trust is like a giant puzzle with a lot of pieces. We're going to try and fit them together to see what kind of picture emerges, especially when it comes to their money matters. So what exactly are we looking at here? Well, this filing is essentially a shareholder report for several series managed by Macquarie VIP Trust. Think of it as a check-in on how these investment funds are doing over a 6-month period ending in June. We're seeing reports for various series like Emerging Markets Total Return Fund for Income Growth and Income, and many others. It's a mix of everything from stocks to bonds to other financial instruments, all meant to grow or protect people's investments. Now for the nitty-gritty, the financials. These reports give us a snapshot of the money involved. For example, the Macquarie VIP Total Return Series Standard Class reports a series net assets of a whopping $36,500 with series net assets totaling $705,000 to $10,529. Clearly, these are significant amounts of money at play. When we look at the top investments for the Macquarie VIP Emerging Market Series, things get interesting. Taiwan semiconductor manufacturing takes the top spot at 18.67% of the holdings. That's a huge slice of the pie. Right behind it, we have SK Square at 13.74% and SK Hynix at 11.05%. These big players in the technology world are clearly central to this fund strategy. The report also details sector allocations. For the Macquarie VIP Emerging Market Series, information technology is king at 41.59%. That tells us this fund is heavily leaning into tech companies, a sector known for its growth potential, but also its volatility. Industrials and financials follow at 15.36% and 9.98% respectively. This concentration in technology is definitely a key takeaway. Let's dig a bit deeper into the Macquarie VIP Total Return Series Standard Class financials. We see their investments at value are 36,206,335.34% of their holdings and US Treasury obligations at 20 Farad 8%. The strategy here seems to be a blend of growth with a sizable chunk in safer government bonds. The statement of operations for the Macquarie VIP Total Return Series shows a net investment income of $14,544 for the 6-month period. On the flip side, the net realized and unrealized gain loss and fars out of the real engine of profit here is coming from the market movements or the changing value of their holdings. Now let's talk about the bigger picture for Delaware VIP Trust. The company is facing some significant changes. Notably, Macquarie Group Limited, the parent company of their investment manager DMC, announced an agreement for Nomura to acquire their US and European public investments business. This deal, expected to close around October, is a big deal. It means the existing investment advisory agreements will automatically terminate. In anticipation of this, a new advisory agreement is being proposed to shareholders. This signals a potential shift in how these funds are managed and who is at the helm. Looking at the risk section, which is crucial for understanding where this company might face challenges, Delaware VIP Trust mentions credit and market risks. They highlight that investments in equity securities are subject to market fluctuations, which directly impacts their net asset value. They also point out risks with fixed income securities, especially when interest rates rise. Their exposure to emerging markets, especially the Greater China region, is also a significant risk factor due to political, social, and economic uncertainties. The subsequent events section is quite telling. The potential acquisition by Nomura is undoubtedly the most significant development. This is not just a minor change, it's likely to reshape the management and potentially the investment strategy of these series. Shareholders are being asked to approve a new investment advisory agreement, which means they will have a say in the company's future direction. So what's my take on all this? Delaware VIP Trust, through its various series, is managing a colossal amount of money. The financial tables show a deep dive into where that money is invested, with significant holdings in technology and financial sectors for some series. However, the real story here is the impending change in ownership, or at least management, of the advisory business. This kind of transition can bring both opportunities and risks. The company is trying to reassure investors by proposing a new advisory agreement, but shareholder approval is key. The market risks are always present, especially with concentrated investments in sectors like technology or emerging markets. The company itself seems to acknowledge this by detailing at every business. This kind of transition can bring both opportunities and risks. The company is trying to reassure investors by detailing various risks in their reports. The direction hinges heavily on how this acquisition plays out and how the new management team navigates the existing strategies and market conditions. It's a wait and see game, but for investors, paying attention to these filings is crucial. What do you think about this acquisition and its